Hello everyone, welcome to my channel. Today I'm going to talk about do not ignore household employee payroll tax rules. Let's get into the video. If you hire a domestic worker to provide services in or around your home, you probably have a tax liability that you do not know about, or one that you do know about but are ignoring. Either situation can come back to bite you. When the worker is your employee, your liability includes both withholding and paying payroll taxes, as well as issuing a W-2 after the close of the year. Sure, it is a lot easier to simply to pay your worker in cash so as to avoid federal and state payroll taxes and the paperwork that goes with them. Your domestic worker will likely be fully cooperative with a cash deal because he or she can also avoid paying taxes. However, if the IRS or your state employment department finds out about these payments, the result could be very unpleasant for you. Some families may be paying their household help via a third-party payment processor such as PayPal, Venmo, etc. These payment processors must begin reporting those payments on Form 1099-K when the total for the year exceeds 600 in 2025, down from 5,000 in 2024. Not everyone who performs services in or around your home is classified as an employee. For instance, a plumber or electrician who makes repairs in your home will generally be a licensed contractor. The government does not classify contractors as employees. On the other hand, the IRS has conclusively ruled that nannies, housekeepers, senior caregivers, and some gardeners and various other domestic workers are employees of the people for whom they work. It makes no difference if you have a written contract with the worker. Similarly, the number of hours worked and the amount paid do not matter. You are probably thinking, what? Wait a minute. Perhaps everyone you know pays in cash, and none of them are paid payroll taxes or issued a W-2 for household employee. However, if a worker gets injured on your property or if you dismiss the worker under less than amicable circumstances, it's a pretty sure bet that your household employee will be the first one to throw you under the bus by reporting you to the state labor board or by filing for unemployment compensation. Generally, an unemployment insurance claim form requires the worker to list all employers and wage amount to get benefit. That in turn creates a letter audit to collect state employment taxes and a referral to the IRS to collect federal employment taxes, FICA and FUTA. Some individuals try to circumvent the payroll issue by treating a household employee as an independent contractor, incorrectly issuing the household employee a Form 1099 NEC. The easiest way to comply with the law, both federal and state, is to engage a payroll company to make the payroll payments and take care of the paperwork and required filing. If you are a do-it-yourself, uh, there are the correct actions you should take for domestic employees. 1. Obtain a federal employer identification number, which you will use in lieu of your social security number when filing the required reporting forms. Note, If, as the owner of a sole proprietorship business, you already have a IFIN, you should use the number instead of requesting a separate one as a household employer. Obtain a state ID number for unemployment insurance and state tax withholdings. Withhold Social Security and Medicare taxes, also known as FICA taxes, from the employee's pay if it exceeds the annual threshold. 2,800 in 2025, up from 2,700 in 2024. Withhold income tax from the employee if requested by the worker and if you agree to do so. File state employment tax return as required. Generally, quarterly, although beware that some states require monthly returns, and make the required deposits for state employment taxes. Prepare a W-2 for the employee and a W-3 transmission. File them by the end of January. File Schedule H with your federal individual income tax return and pay all the federal payroll and withholding taxes. That is the federal taxes that you withheld from the employee's pay, plus your matching share of Social Security and Medicare taxes, plus federal unemployment tax, which is entirely your responsibility. Limited exception: if you operate a sole proprietorship with employees, you may include the payroll taxes of your household workers with those of the business employees, but you cannot take a business deduction for those taxes. Generally, it is better to keep the personal and business reporting separate. Some additional issues to consider are as follows. Babysitters. When employing babysitters for occasions such as when you leave your home to go to dinner, movies, or other outings, it is crucial to recognize that these individuals fall under the household employee category. Unfortunately, the law mandates compliance even for some teenage babysitters with no exceptions provided. We acknowledge that many taxpayers might not adhere to these regulations, but legal requirements remains. However, certain circumstances exempt a babysitter from FICA withholding. Domestic services rendered by individuals under 18 years old. Service performed by a child under 18 as an employee of their parent are not subject to FICA taxes. Services by a child under 21 as an employee of their parent are exempt from FICA tax considerations if these services do not relate to the parent's business activities or consist of domestic tasks within the parent's household. Over time, under the Fair Labor Standards Act, domestic employees are non-exempt workers and are entitled to overtime pay after working 40 hours in a week. Living employees are an exception to this rule in most states. Hourly pay or salary. If it is illegal to treat non-exempt employees as if they are salaried. Separate payrolls. If you own a business with a payroll, you may be tempted to include your household employees on the company's payroll. The payments to the household employees are personal expenses, however, and are not allowable deductions for business. First, you must maintain a separate payroll for household employees. In other words, you must use personal funds to pay household employees instead of paying them from a business account. Eligibility to work in the U.S. It is illegal to knowingly hire or continue to employ an alien who is not legally eligible to work in the US. When hiring a household employee who works on a regular basic, you and the employee each must complete Form I-9 Employment Eligibility Verification. You will need to examine the documents that the employee presents to establish the employee's identity and employment eligibility. Other issues, special situations not covered in this video include how to handle workers hired through an agency, how to gross up wages if you choose to pay an employee's share of Social Security and Medicare taxes, and how to treat non-cash wages. Thanks for watching this video, and do not forget to subscribe to my channel.